What does soon mean to you? There was some discussion of how soon is soon.
Well, I would expect that it's probably November, maybe December. It's a nebulous concept. It should have said in a few weeks or in a month or two.
Yeah. Let's talk about inflation, which is clearly running hotter, more than double the target. And the members of the board seem to be thinking that it's going to come back down rather dramatically, that most of it is so-called transitory, 2.2% prediction for next year, still a little bit above the 2% threshold. What if it stays higher longer? Doesn't that put the Fed in a bit of a box?
I fully agree with you. Inflation, there's more to come. There's more in the pipeline. We have had adverse exchange rate changes, especially towards key suppliers such as China. We cannot get enough supplies into the country. So inflation will be with us for a while, and it may well increase. Wages are going up now. We have important wage negotiations going on, and that will set a floor under future inflation. So inflation, in contrast to what the Federal Reserve is saying, I think will not be temporary, but will be with us for quite a while.
And might that then accelerate the point at which the Fed begins to raise interest rates, or accelerate the pace of tapering of bond purchases?
Well, I think they will be probably cutting the purchases in half, roughly. So that tapering process will continue at a modest pace. It's still an enormous stimulus. The purchases, if they purchase $60 billion a month, that is still a lot of additional liquidity coming into the system every single month. But I think it will, if inflation persists, which I think it will move forward the point at which the Fed is forced to raise interest rates. And sooner or later, they got to do that.
Bob, what do you think would force the Fed to raise rates when they're already projecting inflation above target and indicating that's not going to be, it's not going to make them in any hurry? What would force them? Would it be, like most things usually, would it be the market?
Well, it may be the market, but also, I mean, just rational thinking will do it. After all, inflation rate, even the Fed's preferred personal consumption expenditure deflator of GDP, is now running at 4.2%, which is more than double the rate at which they want to have it run. Congress told it to have stable prices. Well, we are far away from stable prices. So I would like to see congressmen really asking the Fed chairman, what do you consider stable prices? Over 4% inflation is not price stability. And so sooner or later, you've got to increase interest rates to reflect these price pressures.